This year has been anything but boring for global capital markets, which have been turned upside down by continued easing of Western central banks, low yields, and volatile commodities. In 2016, a brave new world opened up for the Middle East and Gulf states as they faced low oil prices, weakened domestic demand, and dwindling fiscal headroom. Many of these challenges will arise in 2017, but so will new opportunities. In countries that for years rode high on booming oil revenues, rising deficits, budget cuts, and social discontent are becoming more prevalent. A global production push is further deflating the price of crude, but prudent domestic fiscal policies and a stable financial environment are keeping capital outflows down, with MENA markets still growing at healthy rates. Average GDP across the region again rose year on year. It is expected to top 2.8% in 2017, driven by higher tax revenues and substantial capital reserves. Excess cash can now be put towards infrastructure projects, sustainable development, and economic diversification. The great visions laid out by some of the GCC states bear hope and optimism for the future. But today, relying on reserves won't be enough. Growing fiscal deficits prompt heavier external borrowing and stronger exposure to local capital markets. With Saudi Arabia's international credit market debut, GCC sovereign bonds and Sukuk issuances have now topped $65 billion, as global investors look for higher yields in politically stable environments. Islamic finance is another sector with strong potential, with more than 400 lenders operating globally and overall assets estimated at $2 trillion. Penetration of Islamic banks in the Middle East and Asia is still below 10%, so there is more room for growth, and banks in the GCC are well positioned to take the lead. So what next for the Middle East? Looking ahead, social, economic, and structural challenges still linger on the horizon. Regional conflicts continue, aggravated by global political tensions. Commodity prices are unlikely to soar, despite modest improvements in 2016. And looking across the Atlantic, we have Donald Trump, the new US president. He campaigned on the promise to deviate from conventional policies, build border walls, agitate America's Middle Eastern and Asian allies, and cut taxes. But will he keep those promises? The truth is, no one really knows what to expect from the president-elect. And Trump aside, oil price volatility, Fed rate hikes, a hard landing in China, and various EU crises are likely to be a threat in 2017. With this much volatility in the developed world, and with strong fundamentals prevailing in many emerging markets, we expect the credit market in the GCC to stay buoyant next year.